Hello everyone, my name is John and welcome back to my channel. Here on Bitcoin, we tried to break really strongly below this support level, but there was so much bullish momentum that now we've continued to the upside off of this really strong support level. Plus on Ethereum, we tried to break below this level, but we had even stronger momentum to the upside, even shown by this MACD oscillator. But before I get into all the price action, I want to jump into the news of Bitcoin and investing, so make sure you stay tuned until the end of the video. If you enjoy my daily content, make sure you hit the subscribe button and you like the video. Let's jump over into some crypto news. This is new and just came out. US investors would rather trust their wealth in Bitcoin than the US dollar, especially if the US dollar hits the debt ceiling for another time. The United States continuously keep raising the debt ceiling year over year over year. Unlike Bitcoin, when there's a fixed supply of only 21 million coins, the debt ceiling just keeps jumping to new numbers as they print more money. Here, you can see that a lot of professional and retail investors are actually interested in gold. Again, the reason being is you can't just create gold from thin air. You need to use a lot of resources. You need to use a lot of energy to actually extract gold out of the ground. With treasuries, a lot of people are interested in investing in treasuries. Reason being is you get that fixed income of 4 to 5% every single year. That is attractive for a lot of people who can invest risk-free. But you can see people would rather invest in Bitcoin than the US dollar. This is definitely shown more on the retail investors, but even professional investors are shown that they would rather be holding Bitcoin right now than the US dollar, than yen, than the Swiss franc, or even something else, showing that there's a lot more momentum globally coming into Bitcoin, especially when you see the US debt ceiling continuously be raised and they're just printing more and more money. Next in breaking news, G7 countries are accelerating global implementation of the travel rule for crypto assets. As you would know, when you're traveling, you're only allowed to bring $10,000 maximum of your home country when you're traveling. It's time to end this dictatorship. Bitcoin is freedom money and there's nothing else these clowns can do to stop us. It's by the people, for the people. So let's quickly read into this article. So this G7 group is meeting up to try and put some crypto regulation in place that would block you from bringing a large amount of crypto when you're traveling. Here you can see committee members were discussing the controversial travel rule requiring any financial institution processing cryptocurrency transactions greater than $3,000 to disclose the sender's name, the address, the account name. If this rule was to pass, it would block a lot of people from being able to bring their crypto on either their ledger or keeping it on exchanges and actually being able to easily transfer without letting the government know exactly how many funds they're bringing with them. It's unclear if the US President Joe Biden will attend, and we really hope he doesn't, as we do not want these rules getting passed in the United States, as Bitcoin is currency for the people, by the people. Next in global news is that Argentina's central bank recently raised interest rates to 97%. Yes, 97% if you want to take out a loan from the local bank in Argentina. It just shows that there's a lot of inflation happening right now in Argentina. It's becoming like Venezuela, where people were lighting the currency on fire because that was worth more than having stacks and stacks of bills that were literally worth cents. Argentina increased its base interest rate by 600 basis points. Usually in the United States or all over the world, you'll see the interest rates being raised by 25 basis points or maybe 50 basis points. Here we've had a massive increase by over 600 basis points. The central bank's decision to immediately intervene as they're trying to prevent financial volatility, but I feel like it's doing the exact opposite to Argentina, because usually in countries, when the interest rate is somewhere around 10%, then the savings risk-free rate that you'll be able to put your money in the bank and get a risk-free return would be something like 7 or maybe 6%. But we're not going to see Argentinian saving rates increase to 80%, where you can put $10,000 in your account in the bank and then earn 80% interest year on year. It's just not going to happen. So this interest rate hike is unsustainable for Argentina. Lastly in the news, I want to play this video by Milton Friedman where he explains that inflation is made by the government and no one else, whereas the government is always giving blame on all these other peoples, the Saudis, the oil companies, and all these stupid excuses when inflation is actually created by the government. So listen to this video.
Inflation is the most destructive disease known to modern societies. There is nothing which will destroy a society so thoroughly and so fully as letting inflation run riot. Inflation doesn't arise because you got consumers who are spendthrift. They've always been spendthrift. It doesn't arise because you've got businessmen who are greedy. They've always been greedy. Inflation arises because we as citizens have been asking you as politicians to perform an impossible task. We've been asking you to spend somebody else's money on us, but not to spend our money on anybody else. Everybody talks against inflation, but what he means is that he wants the prices of the things he sells to go up and the prices of the things he buys to go down. The real tax on the American people is not what you label taxes. It's total spending. If Congress spends $50 billion more than it takes in, if government spends $50 billion, who do you suppose pays that $50 billion?
Of course.
The Arab sheiks aren't paying it. Santa Claus isn't paying it. The Tooth Fairy isn't paying it. You and I, as taxpayers, are paying it indirectly through hidden taxation.
Now let's come over to Bitcoin and look at price on the daily chart. Right through here, we have a massive support level. There's a lot of support, a lot of support, a lot of support right through this area. And we're seeing that Bitcoin actually failed to break to the downside. We only had this tiny little wick that came through the downside. But as you can see, this body of the candle actually closed above and closed inside the support level. This would be a lot more bearish if this body actually closed all the way on its low right down here. It would have given us a higher probability chance to then continue to the downside. But when we have this wick, it means right through this area, there was a lot of momentum and there was a lot of buyers actually coming in and buying this valuable area. Many traders thought that once we just broke this level down here, it would be a free fall all the way back down into the $20,000 to $19,000 per Bitcoin. But that just wasn't the case, and it showed right here on this perfect wick now beginning to the upside after we had this inside bar candle. If we now look at the 4-hour time frame for Bitcoin and scroll into the chart, right through these areas, we were in a massive trading range. Big up, big down, big up, big down, big up, big down. We were basically in this sideways pattern, trading from the top side and also trading to the bottom side. But we did have this little crack to the downside, but that was actually extremely bullish, as you can see using this MACD oscillator. Through here, we had a really strong push to the downside, also shown on the MACD indicator, but we made a lower low in price, but we made a higher low in the MACD indicator, which is a classic divergence pattern. So on the first tick up, when this MACD indicator high low actually ticked from red to white, signaling that we're now going to go to the zero line and above, that was the perfect time to enter this divergence pattern. And it was exactly on this bar right through here, we got that divergence pattern and an easy trade all the way to the upside of over 5% if you caught it from top to bottom, but at least somewhere between 2.5 to a 4% profit easy on that trade. And it really doesn't look like this is going to be the end, because we had a really strong upside push, breaking above this high and breaking above this high also, which signals to me that we might have some retest areas right through here. As I always explain, this was initially resistance. Look, we failed. Resistance, resistance, resistance. But then look, we broke above this resistance. When a resistance gets broken, it's going to act as a support level. And you can see that right now. Right through here, we're beginning to have a lot of buyers come back in, and I'm expecting this tick up of the MACD indicator to then continue to the upside. And some easy targets for here would be the top side of this trading range. Right through here, resistance, 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 resistance. So this is the bottom side of this trading range, and this is the top side. We can easily have a move from this bottom side all the way to the top side of over 12% profit in just a couple of days. Before I move over to Ethereum, make sure you've liked the video and you subscribe, as I'm releasing these videos every single day. Now coming over to Ethereum on the daily chart, this looks cleaner than Bitcoin does. through here, we initially had a lot of resistance. We then broke this resistance, used it as support, and then broke up even further. And again, I'm always saying that once a resistance level gets broken, it then flips to a support level. So you can see that happening right now. This initially was a resistance level, and look exactly where we're supporting. We did have a bit of a wick down below this level through here, but as I've always said, if we don't get the candle closing on its low, it actually can be quite bullish because we're getting traders coming into this area trying to stop other traders out. But now we've continued to the upside and we've closed back in this support level, which shows that the bearish momentum might not be there. And we're looking to at least retest these highs, if not retest this top of the trading range in this area here. It's even shown by this MACD oscillator histogram. As you can see there, we're now beginning to tick to the upside. We were initially had 5, 6, 7, 8 days in a row of continued downside momentum, which was right through this area. But we're now beginning to tick up. We're beginning to tick up in a support area. The MACD indicator is showing us that we're now beginning to tick up. So there's multiple confluence zones to actually tell us, yes, this is a buy, and it's not a buy on just one single strategy, it's a buy on multiple different strategies. Now on the 4-hour chart, this looks even cleaner than Bitcoin does. Again, in this support area, we had a massive trading range, big up, big down, big up, big down, big up, big down. We couldn't crack the top and we couldn't crack the bottom, but we did have this small little push to the downside, quickly reversed up, and we had that classic MACD divergence where we made a lower low in the MACD indicator, we made a low in price, and now we made a higher low on the MACD indicator, but we made a lower low in price, signaling that we need to look to get long and get long pretty soon. As soon as this MACD indicator ticked from red over to white, that was our indicator right on this green bar in here to actually enter in the market and expect at least a retest of this exponential moving average. Reason being is we're traveling to the downside on the EMA, and it shows that we definitely could have some more downside momentum. But when we get this MACD indicator signaling to us we have a divergence pattern, this would be my first area that I would look to get out of my trade. But you can see initially we had a bit of resistance. What happens? We crack through. Once resistance gets broken through, it then becomes a support, and you can see it happening right now. If you look over to the last bar right here that's happening right now on Ethereum, we came back into this resistance level, and we're now supporting off it and now pushing to the upside. And I am expecting a retest of these highs through here. Reason being is it was resistance. We're in this trading range right here, and we're bouncing up and down and up and down. And just because we made a small crack, this is going to trap a lot of shorts thinking, oh, we're going to collapse to the bottom. But no, we got this divergence pattern, and I'm now expecting to retest the top of this trading range, which from the bottom to the top would be around a 10% profit for Ethereum in just a couple of days. That's all I have for you today. I really hope you've enjoyed the video, and make sure you've liked and subscribe as I'm releasing these videos every single day. Leave a comment with your name on your favorite part of the video. And if you'd like me to discuss anything specific, make sure to leave it in the comments as I'm reading all of your comments every day.